If we look at the 200-week moving average, nothing much happened. It increased a little as the 200-week moving average always does, and it's now at 34,000. So you can see that as a very conservative floor, but in bull markets, it's indeed very conservative. In bear markets, it might touch or even go below the 200-week moving average, but in bull markets, we will go far higher, and I think the 200-week moving average is maybe not very interesting. This chart, the realized price, is very interesting, and I tell you why. The realized price, which is basically the cost price of Bitcoin, all the 19.6 million Bitcoins weighted against their last transacted price, is now $29,000, and the 2-year realized price is $45,000. It's a little bit higher than last month, but it's plateauing a little bit. Same is true for the 5-month realized price. It's at 60K right now. And the very interesting thing is that is a huge support level in bull markets. So dips, like we were seeing last month, usually bounce on the 5-month realized price, the short-term hodler, also known as. And we can see that here in 2020, it was a bull market. It dropped till the 5-month realized price, and you can also see the plateau in the realized price and the 2-year realized price. You can see it here in 2017, here in 2017, that little dipped until the light blue 5-month realized price and then went up again. I think that's what we're going to see as well. And the same happened in 2012, right? Here, puff, it goes to the light blue line and then resumes the bull market. I think that's the exact same situation that we're in right now. Realized price and now realized return. Realized return is still positive, 7%. So April sellers got 7% return, and the data suggests that the sellers are taking profit and that it's not the ETF weak hands that sold. Taking profit in a bull market is a very logical thing to do, especially for traditional finance people. 7% is a lot in a couple of months in traditional finance terms. So don't blame them. Sometimes, and especially if you're new to the market, to the Bitcoin market, you want to see if the profits are real, and you want to take the profit out and then reinvest it. That's what I think is going to happen. Bitcoin in profit also dropped a bit, of course. It's not 100% anymore because the buyers at 70K are in loss. And so 12% is in loss right now, and that's yellow. And we could probably compare that a little bit to what happened in 2020 here, red, yellow, and then the bull market resumes. Or in 2012, we see a beginning of the bull market and then yellow and then second start. I don't think we can compare it to 2013, which was after a 10K, and then the bull market continued to do another 10K, or with 2019, when there was a very early bull market, it seemed to be a very early bull market a year before the halving. That was just too early. We're now at the halving, so I think it's more like 2020 and 2012.
The crypto market's recent turmoil persists, with most leading cryptocurrencies witnessing declines of at least 4% over the past week. Bitcoin, the foremost cryptocurrency by market cap, is presently trading below $58,000, maintaining a level it breached a few days ago after dropping below $60,000. The Crypto Fear and Greed Index, curated by CMC, has transitioned from greed to a neutral stance, marking its lowest point in 2024. This downturn has adversely affected spot Bitcoin exchange-traded funds, ETFs, as evidenced by substantial outflows on Wednesday. According to BitMEX research, these ETFs experienced record outflows, totaling a staggering $563 million in a single day. BlackRock's IBIT also suffered significant outflows, amounting to approximately $37 million, marking its bleakest performance to date. Fidelity's FBTC faced the largest outflows, tallying $191 million, while Grayscale's GBTC saw losses of about $167.4 million. Despite the prevailing pessimism, there remains optimism within certain circles, believing that we are merely in the nascent stages of a bull market. This sentiment was echoed by Plan B, a pseudonymous analyst, who recently asserted on the social media platform X that April's closing price of $60,632 signaled the end of an era, the last blue dot month, ushering in the true commencement of the bull market. In a subsequent post, Plan B expanded on their analysis, noting that Bitcoin's Relative Strength Index, RSI, currently stands at 66, mirroring levels observed during earlier halvings. This reinforces the notion that the market has yet to hit its stride, with May poised to mark the first red dot month, a precursor to the impending countdown to the next halving event. Plan B's projections foresee Bitcoin reaching approximately $500,000 within the 2024-2028 stock-to-flow cycle. In a bid to elucidate their forecast further, the enigmatic analyst took to their Plan B YouTube channel, elaborating on their expectations for Bitcoin's trajectory throughout 2024 and 2025. Amidst the turbulence, there remains a glimmer of hope, as proponents of the cryptocurrency anticipate a resurgence in the market's bullish momentum. Now, let's continue with Plan B May prediction.
The Bitcoin market cycle, and everybody was watching for that red dot. If it would turn to yellow, it did not. So the bull market continues. I know the emotions are very different. I know some think the bull market's over already, but that's exactly why we use models, to fight against emotions and the on-chain transactions that this market cycle indicator is based on. The on-chain transactions signal that we are still in a bull market, despite this little dip. And note, by the way, that here is a dip as well. Here is a dip as well. It's very similar. Here's a dip. Here's a dip. So red doesn't mean there won't be dips. In fact, 25% dips are quite normal in a bull market. So better get used to it. There might be more. But the good thing is red will continue, in my opinion. Next chart, let's go to the technical indicators. RSI. Last time we had a very high RSI of 77, and last month it dropped to 66. It normalized, if you will, because we were talking here about, well, is this normal? It's the highest. It could be normalizing, it could be a new normal, but okay. So it normalized, and it's now at the level of the last couple of halvings. So this is the 2012 halving, the 2016 halving, and the 2020 halving was, of course, below. So we're above the 2020 halving levels in RSI. And, well, this is the last blue dot. The next dot, the May dot, will be red. So, in fact, we haven't even started yet, in my opinion. So I think that the red dots that we will see starting from May, the red dots will be higher than the blue dots. So the red RSI will be higher than the blue RSI, which means we will see RSIs well above 80, like we have seen in the previous bull markets. And that means large price increases. RSI 80 is really absolute steep price increases in a real bull market. So I think we still have that in front of us.
Thank you for joining us today on this insightful journey into the world of crypto and investing. If you found value in today's discussion and want to stay updated on future crypto news and market insights, don't forget to hit subscribe button below and click the notification bell. By subscribing, you'll be part of our growing community, gaining exclusive access to timely analyses and strategies. I look forward to having you with us in the next video.